Should you invest in gold? I ask because it's a really big topic among investors. As with any investment, you should always make sure that anything you invest in is aligned with your risk parameters, like your financial goals, your risk tolerance, and your time horizon. Having said that, let's take a look at the pros and cons of investing in gold, and then let's come to a conclusion. By the way, if we haven't met yet, my name is Mitch Goldberg. I'm a financial advisor with the wealth management firm Client First Strategy. So first, the pros. Gold is a rare element that has been considered a store of value and currency for thousands of years, and it's limited in terms of supply because it depends on how much can be mined from the ground. It's also considered a safe haven asset, so when geopolitical events break out, gold typically rises in value. Think in terms of events like wars. Gold also has a few industrial uses as well. While it's not as good of a conductor of electricity as, let's say, copper is, but gold is also non-corrosive, so there's a limited amount of gold that's used in electronic devices. But perhaps one of the best reasons to invest in gold is because it's an ingredient in Goldschlager. Whoever thought you could actually add a little bling to your diet? Another big use for gold is, of course, the jewelry industry. But for investors, the most popular reason to own gold as an investment is because historically it served as an inflation hedge. And with global central banks printing money like mad in order to push up inflation, owning an inflation hedge now does seem to make some sense. Now, let's take a look at the cons of investing in gold. Now, gold historically may be considered a safe haven asset class, but it doesn't mean it's actually a safe, stable investment over time. In fact, gold has been known to be pretty volatile. The other thing is, when geopolitical chaos does break out, the effects that geopolitical chaos has on the price of gold usually wears off pretty quickly once the geopolitical event has passed us. Gold is not a currency. If you have to go to the supermarket and buy a gallon of milk with a chip of gold, I'm sorry to tell you this, but we're going to have much bigger problems to worry about than investing. Then there's that silly talk about going back to the gold standard, which would basically set our economy back by about 60 or 70 years. You should also consider that gold does not generate earnings, it doesn't generate cash flow, it doesn't pay a dividend. As a matter of fact, it actually costs money to store gold. So I don't really look at gold as a productive asset in terms of or compared to investing in the stock market. Now, there have been short periods of time, intermediate term periods of time when gold has outperformed stocks, but over the very long term, stocks have outperformed gold by miles. So what's my take on all this? Just like any other investment, gold is just a tool, just like stocks, bonds, mutual funds, exchange traded funds. It's just a tool that you use in conjunction with other tools. You put them together in a portfolio in order to potentially achieve a positive financial outcome over the long term. But if you believe that inflation is coming, and if you believe we will see a spike in geopolitical chaos, then in that case, it does make sense to own some gold as a hedge. But there's no guarantee that gold will continue to act the way it historically has. Thanks for watching. My name is Mitch Goldberg. If you have any questions, you can certainly reach out to me. My website, clientfirststrategy.com, and I'll see you next time.